You were just notified by your mortgage broker that you received a conditional approval by the lender. We're going to talk about what that means, what are the next steps, and what we need you to do. Basically, a conditional approval for your mortgage is a good thing. That means the mortgage lender, is interested in closing the transaction. They want you to work together with your mortgage broker to satisfy certain conditions. That's why it's called conditional approval. Let's talk about what those conditions could be. I'm Robert Niazov, your trusted mortgage source. Please finish watching this video to the end because a lot of good information is coming. Like the video, comment, and subscribe. So, conditional approval means that at some point very soon you will go to closing if those conditions that bank gave you will be satisfied. Now, those conditions normally include things like appraisal if one wasn't done yet. So let's talk about the appraisal. Appraisal basically is a report that is created by the certified specialist who is trained to provide value for homes. In this case, it will be subject property meaning the one you're buying or refinancing. And they compare it to similar homes in the neighborhood and they say, okay, in our opinion, this house is worth X. It's important for the bank to send this independent person because what if you overpaid for the home? Okay, then they need to base their calculations, base their underwriting on the value what the appraiser suggested. Unfortunately, if the appraiser comes in higher than what you paid, lenders do resort to your purchase price. Next things could be related to your income or to your assets. For example, if we provided pay stubs to the bank, then they will say, well, give us a fresh one or explain why there is a discrepancy, why you worked 40 hours for 2 weeks and then next 2 weeks you worked a lot less. They are not trying to catch you, they just want to know. You see, the lender is interested to finish your transaction. This is how they make money, this is what makes them stay in business. Okay? What could be other things? So one other thing could be things related to your assets or money in the bank, money that you are using as a down payment, closing cost reserves, etc. If you have money in the bank and it's all what's called clean, money's been there for a while, then there shouldn't be any problems or questions. However, if you had many recent deposits, the bank will say, well, we need to know where those deposits are coming from. And it's not so much the banks, you see, it's the government that makes them do this because there's some laws like anti-money laundering laws or laws against terrorism where they make banks check any candidate who wants to borrow money where the money in their account came from. There could be other things related to things that may be not really directly related to you, things like title of the house. There could be things that are related to the insurance. They may ask you for some explanation letters. They can see something on your credit report. So bottom line, work with your mortgage professional, work with your processor. And by the way, I thank my processors for recommending this content, to make everybody's life easier. And obviously, if you have any questions, please reach out to your mortgage broker. Please reach out to your mortgage loan originator, to your processor to get clarification. Everybody has interest in closing your transaction. Good luck to you.